Hey guys, welcome to another episode of Everything Business. If it is your first time, thank you for coming. Please remember to like, subscribe, and share. If you are always coming, thank you for coming back. Today we're going to be talking about payroll accounting, so let's get right into it. So what is a payroll? So a payroll is simply a list of employees that states the amount each employee should receive as a salary or wage. It is important to understand how to calculate the pay of employees. So let's talk about wages versus salaries, right? So a wage is usually paid weekly or fortnightly, right? And the word fortnightly means every 2 weeks, often in cash and often to manual workers, right? As put forward by Wood and Robinson 2018. Now a salary is paid monthly by check or direct bank transfer into an employee's bank account, right? Now, overtime is another term that we need to talk about. Overtime is payment received for working over your allotted time. So overtime is paid in three ways. You have time and a quarter, right? Sometimes they'll refer to it as 1.25, or they will use a fraction, right? So that the fraction 1 and 1/4. You have time and a half, right? They may refer to it as 1.5 or 1, the fraction 1 and 1/2. And then you have double time, right? So overtime can be paid using those rates, right? Now, how do we calculate overtime? It's very important that you learn and you know how to calculate overtime. So let's look at this example. So Tom worked at a firm that pays him $9 per hour. Now, if Tom worked 8 hours overtime at an overtime rate of 1.5 or time and a half, then you are expected to calculate his overtime pay. So let's calculate his overtime pay. So his overtime pay, right? We'd have to calculate his overtime rate. So the amount he gets per hour is what? $9, right? The overtime rate, right? It's time and a half. So it will be 9 multiplied by 1.5, right? Which would give us $13.5 dollars per hour. That is the overtime rate per hour. All right, and so we calculate now 13.5 multiplied by 8 would give us $108. So for the 8 hours that Tom worked overtime, he would receive $108 extra on his normal pay. All right, now let's talk about gross pay and net pay. So gross pay is that pay that you receive before statutory deductions and non-statutory deductions have been taken out. It is that pay, and for those of you who are working class people, it is that part of your pay stub or your pay slip that you love to see, because the gross pay is normally a lot of money. Yeah? Now let's talk about the statutory deductions. So statutory deductions are deductions that must be taken out based on law, right? So the law stipulates that these deductions must be taken out of an employee's pay. For example, income tax, NIS, which is insurance, education tax, and so on. Different countries have different statutory deductions. All right. Now, examples of non-statutory deductions include like trade unions, right? Credit unions, loans, repayments, pensions, or they refer to it as superannuation, right? Contributions, club fees, and so on, right? Non-statutory deductions are also called voluntary deductions, right? It's basically those deductions that you, the employee, right, request to be taken out of your pay. All right, and then you have net pay. Now, net pay is what they call it take-home pay, right? It is the pay that is left after statutory deductions and non-statutory deductions have been taken out, right? There's a little formula that you can use to remember how to calculate net pay. So net pay, right, is equal to gross profit minus total deductions, or you can say statutory and non-statutory deductions. All right. Now there are some methods of calculating people's pay, right? There are actually 4 methods that we're going to be looking at. The first one is the fixed amount of salary or wage. So this is normally on a monthly or a weekly basis. So if you're getting a salary, obviously it's going to be on a monthly basis. If you're getting a wage, then it's going to be on a weekly or fortnightly basis, and it's a fixed amount that you will get every week or every fortnight or every month. All right. Then you have time rates. Now with time rates, a fixed hourly rate multiplied by the amount of hours worked. Right. If an employee works above a set amount of hours for the week, he is paid overtime. So with the time rate, you are paid based on the amount of hours you work. All right. Then you have piece rates, right, which is based on the number of units that you produce. And you can take some examples like from tailors, dressmakers, carpenters, right? They will get paid based on the amount of units that they make or produce. And then you have commission, right? Now commission is when an employee receives a percentage of the amount of sales made. Normally the type of pay received by salespersons. Salespersons, they will come and they will try to sell you stuff and stuff like that. They will get a commission, right? A percentage on the amount of sales that they make. Time cards and timesheets. Now these are what we would call the source documents to make up the payroll register, right? So time cards are cards placed in a machine that will then record the time on the card that the employee arrives at work. It is from this time card that the timesheet is made up. So the timesheet now shows the amount of hours an employee works per week, right? It shows the amount of normal hours worked and also the amount of hours worked above the normal hours, which is called overtime. All right. Now, this is what a payroll register would look like. So the payroll register will show the earnings for all employees and is normally prepared for each pay period. All right. So in the payroll register, right, it's a bit long. Don't worry, in the exam it will be written up for you. It will be drawn up for you. You have various columns for the employee to record the names of the employee, total hours to record the total hours worked by each employee. Then you have the regular hours or the regular pay, right? So this is one used to record the regular hours worked by the employee. The overtime column is to record obviously any overtime hours worked, right? The gross profit column is to record the gross pay. Sorry, the gross pay column is to record the gross pay, right? That is the pay that you receive before statutory and non-statutory deductions are taken out. And then you have this thing here, the accumulated year-to-date earnings, right? And that is to record gross pay of the employee from the start of the accounting period to date, right? Then you have like the statutory deductions like NIS, which is the national insurance, income tax, right? In some countries, life insurance is not a statutory deduction, while in some countries it may be a statutory deduction, right? So you have credit union, which is a non-statutory deduction, right? Then you have the total deductions that should be taken out. Then you subtract your total deductions from your gross pay to get your net pay. So that's basically what the payroll register would look like. All right, so let's look at this past paper question, right? So it says PET Plus prepares weekly payrolls for 2 employees hired on the following terms. So we are given the 2 employees, a sales attendant and a cashier. We are given the normal rates of pay, $10 per hour for the sales attendant, $120 per day for the cashier. I want you to realize that one is in hours, one is per day. The normal working hours, right, for the sales attendant is 40 hours. Normal working hours for the cashier is 5 days, right? The sales attendant worked actually 5 hours overtime because you see they worked 45 hours there. The cashier, however, did not work any overtime. Question A and B, I would have answered already, right? Question C, right, we are going to look at now. It's asking us to prepare the payroll register. They would have inserted a sheet, right, the payroll register for us to just fill out, right? So let's look at the particulars. They give us overtime here, right? So the overtime rate is time and a half multiplied by the normal rate, and they're helping you out here when they put multiply by the normal rate. They did not even have to tell you that, right? Because I showed you how to do the calculation for overtime. So social security, and they put in bracket here tax deductible. What that means is that income tax is to be subtracted or to be calculated on the social security, and I'll show you how we do that in a little while. And that's 5% of that taxable figure, right? The pension fund, right? The pension fund is 1% of 1% of the gross profit, right? Social Security 5% of the gross profit, pension fund 1% of the gross profit. Income tax is 10% of the taxable amount. So let's look right at it now. So this is our payroll sheet. You look at the heading, make sure you put in your heading. Normally it's there. If they are going to give you a sheet that is prepared, it's going to be there. So the sales attendant work, the pay rate is $10 per hour. For the cashier is $120 per day, right? Normal hours and days, right? 40 hours is the normal hours for the sales attendant. 5 days is the normal days for the cashier. Overtime, you would have realized that the sales attendant did 5 hours overtime because the sales attendant actually worked 45 hours for the week. If you want us to look back, we can look back. See, the sales attendant worked 45 hours for that week. All right. Now, the normal pay, how do we get the normal pay? It is the pay rate multiplied by the normal hours or the normal days. So it's 10 multiplied by 40 give you 400. 120 multiplied by 5 give you 600. And you know the total is at the bottom there. Now, the overtime pay, right? I already show you how to calculate overtime pay, but let me show you how I got this $75 here, right? So they said that the normal rate is $10 and they are paying a time and a half, so it's going to be 10 multiplied by 1.5, which would give us $15. So it would be $15 per hour for the overtime rate. So it's going to be 15 multiplied by 5, which gives us 75, right? And so we can calculate now our gross pay, which is our overtime pay plus our net pay, right? If there was overtime pay here for the cashier, then you would add it to the 600 and to get the gross profit, to get the gross pay. All right. Then we start to take out our deductions, right? The deductions were given, right? Let us turn back now. So Social Security was 5% of the gross profit. Pension fund was 1% of the gross profit. So the Social Security, 5% of this amount, right? This $30 here is 5% of this. Pension fund is 1%, 1% of the gross pay. The $6 here is 1% of this 600, right? Now the taxable income, right? Because the Social Security and the pension fund, as stated in the question, were taxable, tax deductible, we have to add them, right? So we add the gross pay plus the Social Security plus the pension to get the taxable income. In some countries, depending on their tax laws, some employees may be exempt from paying certain taxes, right? So a part of their income would not be taxable, and so this becomes relevant here for us to know that this part of the income is actually taxable. All right. So here we go. We add the gross pay plus the Social Security plus the pension to get the 503. We do the same thing for the cashier. Then now we calculate the income tax on the taxable income, which is the 10%. All right. And then now we add up the income tax, the pension fund, the Social Security, right, to get our total deductions, right? And then we subtract our total deductions from our gross pay to get our net pay. And that's basically how you do a payroll register. All right. Thank you for watching. See you in my next video.